I'm up $300 in a trade. I have a potential to make over $800 on it, and it's something that you might not be aware of. It happens over and over again in this market, and it has a very high probability of success because just naturally the probabilities work out that this particular thing happens over and over again. So I just take advantage of it. Now, you might not be aware that the Bollinger Band is this blue line here. And when a stock finds itself outside of that Bollinger Band, it's gone beyond two standard deviations. And simply, it just means that when it finds itself out, it wants to work its way back in. You can see it here. It finds itself out, comes back in, finds itself out, comes back in, right? Finds itself out, comes back in. This happens over and over and over again on every single stock because stocks typically want to follow a pattern, a probabilistic a view basically. And so I just take advantage of that. So if I know that 90% of the time when a stock finds itself outside of the Bollinger Band, it wants to work its way back in, then I sell options up top. Now let me show you exactly how I do this. Now first off, when I saw this movie, Berkshire Hathaway started moving the other day, and I saw it on the second day, I jumped in on a trade and bought a couple options on the ride up. Now I took that ride up and I only made about like 150 bucks. I could have made a little more. I was waiting for a bit more of a push, but at least I made $150. But then once I find myself extended out beyond that Bollinger Band, then that's when I want to sell options. So you can see down here, I'm up, well, it's moved to 291, but it's fluctuating around 300. And basically I sell the 365 call, I sell three options, and I buy the 370 plus 3. So that's called a vertical spread. And I'm essentially selling calls up above here. So I'm selling the 365, right, all the way down here, and then I'm buying the 370. And so then I take advantage when the stock eventually does its pullback. And we can see that's what's happening here. Now, over these days, as it was whipsawing back and forth, I didn't have to worry because I had it set up that if it goes over this red line, then I'm going to get out. So as you can see, while this is all happening, yeah, my price is fluctuating, but I can stay nice and calm because at the end of the day, if it didn't go over the red line, I just stay with it. So we see over here on the Analyze tab that I basically have the stop loss is going to be here at 369.47 where that line was that I just showed you. So what's cool is with this is that you can see here that it says I'm going to lose. The purple line is real-time profit and loss. So you can see right now I'm up 299. And if we look down here in the blue, it's showing me the blue line. So as long as Berkshire Hathaway in, I think it's like 14 days, it expires on January 26. So if it expires on January 26, then below this price of 365, then I'm going to be able to make $840. In the meantime, right now, I'm up 300 if I wanted to get out of the trade. And you can see as price continues down and down and down, then this level gets higher and higher. What's cool though, when I first opened the trade up, I could lose about $150 if the price got up to that red line, like I said. But then as time goes on, you can see that I actually end up losing less and less. So now if it goes all the way up there, it's estimated I would lose about $96, $100, something like that. So I've set myself up a trade where my risk parameter actually gets lower as time goes on and my profits get higher, as long as the stock is doing what you need it to do. And currently it is. So you can see, especially if we go look at the 15 minute, so on the 15 minute, we whipped around a bunch. Let's do a 4 hour. So on the 4 hour here, we kind of just came up and I'm selling options up here on that day. And right away we had a really good little drop down, but then I can just let it simmer and it goes back and forth and back and forth. And that has me winning now. So I'm up 283 and it will fluctuate around for sure. But basically I've set myself up where I have 2 more weeks or I have 14 days to go, and the goal is really to get to about 50% of the move. So if I could get to 400, 450, something like that, I would most likely take off the trade. If I'm still far out, if I start to get really close to it, then I'll probably just leave it on and try to make that full 800. But this is a very easy, calm trade that you can put on where you just kind of set it and forget it. I set it up here where I have the red, white, and line you might be asking. Red is if it goes over there, I have to get out. The white line is showing me the price, the stock has to stay below that for me to break even, where I'm not going to lose any money. And then 365 is showing me that's my max win. And you can see here, that's this number right here is, don't go over there. Here's where I start to break even. And you can see the blue line here. As I move down in price, I actually say the price ended here. I would actually make still $600, right? So we have a really good opportunity here to just take advantage of something that has high probabilities of 90% chance of the stock trying to move its way back in, and I can kind of set it and forget it. If that's something that interests you, throw a like and a subscribe, and you can check out on my channel. I have tons of videos of me doing this over and over again, and I appreciate you for sticking around this long. I'll catch you on the next one.